There's already been a fair bit of action in various asset classes pricing in Trump.
Right.
And, you know, I think the biggest question on mind is that just the beginning, or is it going to be sort of a buy on rumor, sell on news? I mean, there's no rumor, this is the event now.
Exactly.
So are we going to be seeing a continuation of the kind of rally in asset classes which were rallying, the dollar, US equities, etc., bond deals, the way they've been behaving? Or is that bit done for now?
I would think that, basically the market is waiting with bated breath for the event. Over the past 3 months, we have only seen policies being articulated on social media. Now is the time for them to be institutionalized and adopted. So the impact of these policies, be it tariffs, be it deportation of illegal immigrants, be it pretty much everything that, President Trump has talked about, the impact would really be felt now, maybe over the next 3 months or 6 months. There are important, methods or modalities that the market would be waiting for. For example, we have been hearing of late, over the past 1 week, that these increased tariffs would be done in a phased manner, about 2 to 5% every month. What does that tell me? It tells me that the policymakers are a bit more cautious about the US inflation picture right now, and they need to be, because that's the critical difference between Trump 1 and Trump 2. US inflation and US inflationary expectations are a lot higher today than they used to be.
So are you saying a more measured Trump 2.0?
I mean, logically it would appear so, because there are many more variables that he has to juggle with. But at the same time, remember that in Trump 1, before these tariffs were implemented, we had a good, about 1 to 1.5 year period of Trump 1 presidency. But this time around, it can be right off the bat. As soon as he takes over, we should expect for some of these announcements to come through. And therefore, my simple recommendation would be brace for volatility, at least in the near term, at least in this quarter.
Brace for volatility.
Because if I look at Asian markets this morning, looking great, India fairly muted. I think we are in our own sort of whirlwind of woes,
right,
whether it's economy, it's corporate results, etc. Does that minimize how much the Trump impact means for us right now, or will it be a little more belated?
I think India would have to brace for the Trump impact as well. We can't be complacent to think that India would be relatively protected. I don't think any of the emerging markets would be. This time around, President Trump is focusing not only on China, but also talking about 10 to 20% additional tariffs on all the trading partners. Right. Now, as far as India specifically is concerned, as you rightly pointed out, there are market-specific issues that have raised their ugly heads. Over the past 3 months or so, we have had a rather bad print on the GDP growth. What I'm more concerned about is the earnings estimate to decline. Right from late September, consensus EPS estimates for India have declined about 7%. That's not good news when a market is trading at super premium valuations. India still trades at about 60% valuation premium on 1 year forward PE compared to Asia. It trades at, close to about 80 to 90% premium on price to book multiple. And the long-term averages on both these multiples are way lower. It would tell us that either India needs to decline or the other emerging markets, other Asian markets need to move up so that that relative valuation premium gets squeezed, gets narrowed down a bit.
What is your sort of exposure to India? Do you think that we are going to see that increase? Because fund flows, global fund flows have been unidirectional as far as India is concerned.
Yes.
I think 45,000 crores in this month.
Yep.
Since 2025. Yep. Do you see that reversing, stopping, or there's more to come?
When we talk about international flows, the critical variable to look at is how the US dollar does.
Yeah.
Until and unless we see the US dollar reversing, and I'm not really seeing that happening anytime soon, at least, not in this quarter, I don't think foreign fund flows into the emerging markets and in India would revive. So currently the trend that we are seeing, foreign fund flows out, domestic fund flows continue to support somewhat. I think that's the only thing that we have to brace for.